Technology companies are crashing in the stock market. What's happening? Why is it happening? Should you care? Why would you care? These are the questions that we are hoping to answer in a few minutes. So sit back and let's get to it. Hey, what up? It's your boy MobbJustice back again with another video, and for today we're looking at what's been going on in terms of technology companies and their fall and decline in the stock market. There's no doubt that during the COVID-19 pandemic, these were the companies that really benefited. People did well, they turned to them, there was high demand, but some of that seems to be waning, and also sentiment seems to be waning. So we're just going to be talking about why that is, what does it mean, and what it could potentially mean going forward. As always, this video is brought to you by the team over at Liyon Media. Head on over to check out some of the crispiest photo, video and audio content. That's www.lionmedia.com. head on over, check it out and just see what the team can do for you. So if you're someone who pays attention to the stock market, then you'll know that globally things have not been good for the tech companies. You'll see that the Nasdaq, which is the stock exchange on which most of the big tech companies are listed on, is actually down 27% so far this year. And then some of your big tech companies, the likes of Apple, which is down 20%, as well as Amazon, which is down 36%. It's really been a tough time for tech companies over the last year. When you look at related markets such as Bitcoin, you'll see that that one is down more than half, down 53% so far this year. And combined, there are trillions that have been lost when you think about the fact that the likes of Amazon and Apple are over that $1 trillion valuation. When they lose such big chunks of their values, and you combine everything that's happened in the market, estimates say that there are trillions that have been lost so far. Having rattled off all those statistics, you may be wondering to yourself why any of this matters. Well, it matters mainly on two fronts. Firstly, if you are someone whose money is tied in any of those companies, there are people who live outside of the US who invest, in companies like the Apples, the Amazons, Googles, Facebooks, etc. Right? Firstly, and then secondly, there are a lot of people's pension funds, in the United States as well as other parts of the world where they'll have offshore investments, etc., that have been tied to big tech over the last couple of years. So a lot of wealth destruction has happened. And then secondly, sort of tied but on the opposite side, is that for people that may not necessarily be invested in those stocks, they might be looking at this as an opportunity to say, is this the time to get into some of these investments? The reason why any of this stuff is happening is pretty simple. You look outside and there are two things that are happening in the economy right now: high inflation and high interest rates. And in the world of investments, there's something that's called risk-off sentiment, where basically investors are looking for safe places to keep their money. They aren't interested in some of the riskier assets, and over time the technology stocks, because some of the business models tend to not be proven, have been looked at as being some of the risky assets, and that right now they're looking at tech assets in that light. So there's that sentiment, and some of those investors have been looking for other places to put their money, which is why there's been such a big sell-off in the market. But all of that doesn't exist in a vacuum. You have to look at what's actually going on in the real economy to understand why tech companies are finding themselves where they are. First is COVID-19. None of us can deny just how devastating COVID-19 has been on the global economy and continues to be. Yes, things have opened up, but a lot of those effects are still being felt. Now, on the opposite side of that scale or that spectrum is the tech companies who largely benefited during the COVID-19 pandemic. The likes of Netflix, the likes of Zoom were called the stay-at-home stocks because people were looking for more entertainment, and we had an increase in your video conferencing, etc. So all those companies saw their stock prices rising phenomenally. But now, as things are opening up, etc., that demand, has started to wane a little bit. So yes, there might still be growth in those companies, but it's no longer at the rate or at the level that it was during the COVID-19 hard parts of the pandemic. And in 2022, no one can deny the huge impact that the Russia-Ukraine war has had on the global economy. Worst of which is the impact on global supply chains and the oil markets. We've really seen a big run on oil prices over the year, and the fuel price at the pump has really shot up in a lot of parts of the world. And with fuel being a base commodity, it means the cost to transport goods and people in economies around the world has gone up, fueling a lot of the inflation that we see. And all of that then feeds into the case that we're seeing right now. And specifically for technology companies, you've got the transport issue that we're dealing with, but also at the same time, the semiconductor shortage that began during the COVID-19 pandemic still has not yet been resolved and continues to be a big issue. For tech companies that are hardware based or that do sell some hardware components, that continues to be a huge burden at the moment. And then another issue that is affecting technology is what has been going on over in China. The Chinese authorities have actually been cracking down on technology companies over the last year or two. A lot of people see the genesis of this as having been around, the shutting down of Jack Ma and Alipay. They were meant to have a huge IPO or initial public offering a couple of years ago, and that was going to be a record-setting $34 billion, but all of that was shut down. And we've seen Chinese authorities cracking down, introducing new regulations on things like gaming, which has affected the likes of Tencent, and all of that has just fed into those Chinese tech companies actually not doing well over in the markets, and that has had some type of spillover effects into the rest of the tech sector. But whilst we're talking about the real economy, it is worth noting that the real economy and the stock market don't always work in tandem. And I think the pandemic is a good example of this. As much as the tech companies, for example, had their run, you'll see that in a lot of the markets, particularly US markets, actually rose during the pandemic. Yet economic growth, real economic growth, actually came down. People were losing their jobs, people were losing income, people were not able to trade at the levels that were before. So just because the stock market is going in a certain direction does not always mean that the real economy is also doing the same. One of the key questions right now that people are asking is whether the current downturn in technology could be likened or is going to be worse than the dot-com bubble burst or crash that we saw at the turn of the century. And right now, I don't think there's been enough time to tell yet, because some of those lows haven't been reached as yet. But this is one of the things that people in the market are flagging to say that tech companies might be headed in that direction. And related to all that is that we may see an uptick in deal flow over the coming months, if not a year or so. Because your valuations are as low as they are, companies with the financial muscle could make opportunistic mergers and acquisitions, taking advantage of some of those depressed prices. But we just wait to see how all of that actually plays out, because you might get in thinking that you're at the bottom and things continue to go down, or that investment actually doesn't work out the way that it has. But all of this does create an opportunity for opportunistic M&A activity. So that's been it for this video. Nothing too hectic, just quick, trying to go over some of the key components when looking at why the tech companies have been having such a bad time in the market right now. But that said, I really do think that technology companies will continue to be quite important and vital to how we function in the economy. And if not more so, because we're likely to even see even more innovation and even more reliance on the technology when you see how many businesses are still making that move towards the cloud, electrification of vehicles, the fact that we're now having even more digital subscription services that people can actually consume online. All of that is going to continue to fuel demand for tech services. So I don't think tech companies are going anywhere at the moment. And because of that, tech companies are likely to keep dominating going forward. What remains to be seen though is firstly, is the same crop of large tech companies going to continue to be the main drivers of the sector? Because we talk about the Facebooks, the Amazons, the Apples, the Netflix, Google, Meta and the like, right? Will they continue to be that small group, that pushes these trillion-dollar valuations? Or are we going to see the emergence of other companies that are gonna come and, take their place? I think Microsoft is a great case study. They've been around for decades, and they've been, one of the most valuable companies in the world at various points, in their history, and others will come surpass them, then they'll come back. So we wait to see how all of that will evolve. And related to that is, as much as tech will continue to be where it is, we always have to be cognizant that nothing exists in a vacuum when you look at the economy. As much as tech will continue to grow, most likely, we might see the resurgence of other sectors, whether it's property, whether it's energy. There might be other sectors that, end up being bigger growth drivers, or perhaps, being the ones that investors look to in terms of parking that money and creating those safe havens. Outside of that, one of the markets I'm definitely keeping a keen eye on is blockchain, right? We've seen the tumble that Bitcoin has had over the last half year or so, and it's actually been, quite bad, the value destruction that's happened in that market. However, I'm more interested in the technology that underlies Bitcoin, that is the blockchain, because one of the things that's interesting about institutional investors, yes, over the last couple of years they had warmed up to dedicating a portion of their portfolios to investing in Bitcoin. But when you do talk to some of the more established players, they sound very bullish when it comes to the blockchain technology itself, and not necessarily cryptocurrencies, because we always have to remember cryptocurrencies are merely a use of that blockchain technology. And it seems there's some broad consensus that blockchain technology could have really great applications in the future. So how that blockchain is going to be used going forward is something that I'm interested to see how it develops, and whether cryptocurrencies, and specifically Bitcoin, continues to be sort of the poster child for that technology, or is there another application, use case that we'll see taking over? So that's been it. You guys can let us know what you think. Do you want me to do more of this type of video? I tried not to go too deep, because there's so much, so many layers when you're looking at what's going on in the market. But I just thought it would be important to touch on this, because these companies are at the forefront of innovation, and they really are at the forefront of how we operate in this modern economy, and how we conduct ourselves on a daily daily basis. You can let me know what you think. Are you invested in any of these companies? Do you want to invest in any of these companies? Do you see this time as an opportunity to actually get into the market, maybe buy up some shares that would otherwise have been maybe too pricey in the past? Or do you think maybe tech stocks continue to be overvalued and it's time for us to be looking in other markets? I'll wait to hear what you guys think in the comments, and I'll catch you guys in the next video.
Hey, this is Baby G and you're watching the Mob Justice channel. Follow us on Twitter, Instagram and Facebook. Live it, love it, like it. This is the Mob Justice TV.